President, ladies and gentlemen, let me start by saying what an honour it is to have been asked to address you on the occasion of your 17th annual summit. And your theme, Insurance Brokers, Innovate, Evolve, Thrive, Advancing Penetration, Enhancing Policyholder Interest, is perfect for the world we find ourselves in today. I'm Steve White, Chief Executive of the British Insurance Brokers Association, or BIBA as we are more commonly known. Like the IBAI, BIBA runs an annual conference, but this year, like yourselves, ours will be a digital rather than physical event. We are currently planning the programme for our conference, which takes place in May. There are a couple of subjects we are including in the programme that I thought would be of interest to you today. The first of these is what you might call an overview of the UK insurance market, and here we'll look at 4 issues. The first of these is the well-publicised court case involving our regulator, the Financial Conduct Authority, and a number of insurers. Following the COVID-19 pandemic, it became clear that whilst most insurance companies had not intended to give business interruption cover for such an occurrence, or indeed priced for such an event, there were some policy wordings that were open to interpretation. The FCA conducted an investigation of some 160 different policy wordings before agreeing with 8 insurers to test 83 of their wordings in court. In particular, the court was asked to consider the definition of disease and infectious disease, denial of access, the authority of the closing body, trends clauses and causation, specific exclusions, and the basis upon which claims are to be adjusted. The legal process here in the UK continues, with the case now with our Supreme Court. The knock-on effect, however, is one of potential reputational damage, a situation we at BIBA are keeping a very close eye upon. The second issue is one of a market in the UK which is hardening. Insurance brokers have been aware for some time that certain markets were starting to harden. The pandemic has accelerated that hardening. At BIBA, we have had governmental discussions on trade credit insurance, which have led to government stepping in to take 90% of the risk. We have also had discussions with our Ministry of Housing, Communities and Local Government regarding professional indemnity insurance for fire surveyors and fire insurance for multi-floor clad buildings. Sectors such as care homes, film and production, brokers' own professional indemnity, and even single business cars are becoming problematical. One of the consequences of the market hardening after many years of softness is that a generation of account executives and account handlers have little experience of having that difficult conversation with their customer, explaining why costs are increasing and, in some situations, why restrictions have been imposed and perhaps excesses increased. It is clear that despite government assistance, some businesses will struggle to survive, and many that do will have their business confidence badly affected. Certain sectors are likely to be worse hit than others. The entertainment and leisure sectors are being spoken about as being particularly vulnerable. So brokers may well have to adjust their focus and seek new areas of development. This crisis of confidence could give brokers the chance to once again demonstrate their value to customers by doing what they do best, discussing needs, giving advice and offering choice, and at the same time, advancing penetration and enhancing policyholder interest. The third issue is the UK's decision to leave the European Union. At the start of 2020, it would have felt very strange to speak about issues without giving early mention to Brexit, but here we are several minutes in before raising an issue that's going to change the way of working for many brokers and others in our sector. The UK and European Union finally agreed terms of a new trade agreement on Christmas Eve, but the deal delivers nothing on services. So the access that UK financial services had to the EU single market has gone, with effect the 1st of January 2021. Insurance brokers have known for some time that to continue servicing their EU-based customers with EU risks post 31st December 2020, they need to obtain an EU authorisation. And this is not something that can be achieved overnight. For those with significant EU exposures, the steps have largely been taken, but for many, it is still likely that there is work to be done. The fourth issue concerns the UK's regulatory environment. BIBA has argued for several years that the weight of regulation and supervisory oversight is disproportionate to the very low level of risk that insurance intermediation poses to the regulator's statutory objectives. On my travels around the UK, talking to brokers large and small, a reoccurring theme everywhere I go is the overburdensome nature of our regulator. Indeed, BIBA calculated that on average, our regulator issues a relevant missive once every 2 weeks. That's way too much for the average small firm trying their best to deal with customers in the most challenging of market conditions. UK insurance intermediaries not only face some of the highest direct regulatory costs in terms of fees and levies to the regulator, the ombudsman, the compensation scheme, and our money advice service, but also significant and increasing indirect regulatory costs, the costs of complying and evidencing compliance. Indeed, a survey we carried out in 2019 showed that on average, smaller firms were allocating 26% of full-time equivalent staff to attend to regulatory requirements. To counter what we see as an over-enthusiastic regulator, we, along with many other sectors of the financial services market, are calling on government to reintroduce an international competitiveness objective for our regulator, forcing it to take into account the competitiveness of UK financial services in the way it regulates and supervises. At the BIBA conference in May, we will also be casting an eye on the future of insurance broking. To do this, we cannot be oblivious to what is happening on a global scale, nor can we ignore emerging markets. In the UK, we have seen a considerable degree of consolidation, and indeed, this is reflected globally. The mergers of Marsh McLellan with Jardine Lloyd Thompson and Aon with Willis have changed the landscape considerably, potentially opening the door to others to grow their profiles and expand their businesses. The Vision 25 report issued by the IBAI sets out very concisely the key drivers, challenges and trends. And if you haven't read the report before or haven't read it recently, then I do commend it to you. It makes the point that in the major markets, insurance broking is a major channel in non-life business. But in some of the developing markets, agents and bancassurance models dominate. We all have a role to play here to highlight the important role insurance brokers can play, from helping to identify and quantify risks through risk management and mitigation to risk transfer mechanisms, offering expert advice and choice, and in most cases, local service. By doing so, we give ourselves the best chance to innovate, evolve, and thrive. I spoke earlier about COVID-19, and it is clear the pandemic will lead to changes in our ways of working. There will be a demand from customers for plainer language in policy wordings, and we should not wait to be asked before we adapt here. One of the bastions of the old normal was the underwriting room at Lloyd's of London. Lloyd's itself has obviously undergone many changes since emerging from a coffee shop on Tower Street in the City of London in the late 1600s. But its decision to introduce a virtual underwriting room to sit alongside the traditional room marks a significant change in the way it is prepared to do business. As a number of brokers have pointed out to me, if Lloyd's can effect such a major change to the way it works, then we really could see seismic changes across the piece. In concluding my presentation to you today, I would like us to think about the word normal. I think most of us would agree that business life after the pandemic is unlikely to return to the old normal. So what might a new normal look like? Socrates, the philosopher, not the Brazilian international footballer of the early 1980s, is quoted as saying, "The secret of change is to focus all of your energy not on fighting the old, but on building the new." As business life starts to focus on a new normal, what normal might look like differs considerably depending upon where a business is situated, what it does, how it does it, and its appetite to do things differently. I've been speaking to broking business owners and leaders of all shapes and sizes over the last few months, and so have heard firsthand how businesses are wrestling with the ingredients of a different normality and their journey to this new normal. Many have said that they are very mindful of striking the right balance between the safety and well-being of their staff and the economic realities of running their business. It is a difficult balance, and as Chief Executive of BIBA, I recognise as we are now finalising our own return to office working plans. Clearly, it is important for businesses of all sizes to take their staff with them on the journey to the new normal. As a business based in the City of London, one of the key considerations for BIBA's planning has been the issue of commuting and people's willingness or otherwise to use public transport, sometimes for lengthy journeys, as a means of getting to the office. Interestingly, during the health and safety inspection we arranged as part of our return to the office planning, it was recommended to us that we should not encourage staff to use public transport. One of the major learnings of the COVID-19 lockdown has been how well certain functions can and have performed remotely. A good number of brokers have told me how surprised they have been at the completely seamless way certain functions have transitioned from being performed in the office to being undertaken remotely. Now, clearly, some types of function and process better lend themselves to remote fulfillment than others. There is some consensus that the more repetitive tasks are perhaps better suited to remote working than some of the more intellectual ones. That consensus contends that for these more intellectual or collaborative type tasks, being in a face-to-face environment allows the optimum discourse between colleagues needed for best results. The use of Microsoft Teams, Zoom, WebEx, and other remote meeting applications during this period of remote working have demonstrated to businesses large and small what can be done highly effectively. But as firms plan for a new normal, they are reflecting on the lessons learnt and taking the best of these learnings into their forward planning. Having decided what tasks are better done where, businesses obviously have to consider also which tasks are best done by whom. Staffing considerations are a major factor in planning for the new normal. As we move along this road, I've seen many examples of polarised views of what a new platform of working might look like. Some staff have taken the view that they are working well and efficiently remotely and would like to have the flexibility to continue, either full-time or at least in part not in the office workplace. Others, on the other hand, have been keen to return to work with colleagues in the workplace, although I hear that in some instances, returning to offices with one-way walking restrictions, face masks, social distancing and separation between workstations has put off some and led them to return to working remotely. Employers, of course, have to balance this with the needs of the business and their abilities to monitor, supervise and motivate their teams. Another telling and relevant quote from Socrates is, "Beware the barrenness of a busy life." Many brokers with whom I have been speaking tell me that the last 9 months have led them to reflect on their work-life balance, and I'm sure this is true for many people. One of the most common challenges of home working can be the blurring of demarcation lines between working time and personal time, with many employers reporting that production has increased during this period as a result perhaps of a mixture of fewer interruptions, but also of possible longer working hours. As we move towards a new normal, many people will take stock on what works for them, their work-life balance, and importantly for their employer, and adjust accordingly. Reflecting on the above, I think we can see enough different moving parts to suggest that what normal might look like going forward will be a kaleidoscope of styles and approaches. But what will not change is the broker's focus on providing the same or a more broad range of services to their customers and clients. Finally, we return to our people, our staff. A new normal will inevitably feature new methods and ways of working, and the will, support and enthusiasm of all involved will be needed to make it a success. If we can knit all of this together, then insurance brokers will be able to innovate, evolve and thrive. We will advance penetration and enhance policyholder interest. From BIBA's perspective, I'm following the advice of Barack Obama, who said, and I quote, "The future rewards those who press on. I don't have time to feel sorry for myself. I don't have time to complain. I'm going to press on." So with that said, ladies and gentlemen, let us all press on. Thank you very much.